Right, so just looking at the daily chart then on cable, how price got it to 160, and in the euphoria generally, I suppose, of all sorts of things, when sort of Europe was sort of top of the agenda, and the general euphoria of maybe getting the budget deficit under control and all that sort of thing. But of course, then we've had the honeymoon, which has sort of now been running a number of months since the election, and the correction then has put it down to 154. Price has actually come down to this level. It's worth just popping a line across where we've got the first 38.2 fib. I think it's probably just slightly above there, and a couple of times it's been looking now as if this could possibly be a bottom forming. Got to keep in mind that this is still very much a downtrend, but the lowest low is actually down here, but then of course it's bounced up to this little high, which has just about managed, well, I say just about, it has managed to take out the preceding lower high. So at the moment we're sort of officially trendless in that it's just dropped into a trading range until either this high or this low gets taken out. Price action on Friday saw the harami from Thursday break on the downside, so the odds now are that this is going to move on down in common with the euro, okay, and with that will be consistent with the dollar index actually moving on up. Now let's just go and look at the lower time frames, and I'm going to argue exactly the opposite case. So we're now looking at 30-minute chart of cable. Okay, so we've got price action. This is Friday, Thursday, Wednesday, Tuesday. Tuesday saw this little triple bottom low, and then it just shot up on Wednesday and put in this sort of major move. So I'm just going to pop a line between the low, okay, and the high. Doesn't need to be super accurate. Then price from that high, okay, pop down, and then want that. Let's just put up a little line picking up this move, just chop the end off it, and then finally we've had price actually come down, okay, to here. Now what this is actually building up to look like is a Gartley pattern. Okay, a Gartley pattern. Now I'm just going to add on one or two little bits of nomenclature, and the very first one I'm going to start off down here, just so that we do this in sort of textbook style, and that is going to be an X. Sorry about the size of the text, it's got no option of actually changing this, or at least I haven't worked out how to do it in TradeStation. That's more to the point. We've got an A there, and come then down to a B. Then we want a little C. Okay, and then finally we've got D just down here. Right, so that's using the correct sort of nomenclature, if you like, for these things. And so let's just then put in one or two other little features of this. First of all, then there needs to be a low and a rally. Pricing comes on down, and it comes down to 61.8. So if we just put the fib grid on of the X to A run, okay, so we've got X to A, we've got a correction that comes down to 61.8. Now it's not absolutely spot on the nose, but it's in the region of. Okay, price then does a little bit of a rally back, and the rally back is then going to form yet another. This is not totally critical exactly where this one rallies back to, but it comes back up to the 61.8, so that's sort of fitting the pattern absolutely fine. And then finally we get D, which has to be lower than B, and then let me just put that grid back on. it has to come down to 78.6, and that's exactly what it does. So it comes down to 78.6. So this now is a Gartley pattern, a complete Gartley pattern setup right now. If this is going to move on up, what needs to happen is that price does not need to drop below D. All right, so price needs to sort of move up somewhat higher. Now, the only sort of slightly interesting feature of this is the last half hour of trading on Friday evening. Then we've got this hammer left behind, when the last half hour of trading the euro was absolutely the opposite. In fact, it tanked down, and the last half hour of trading on the Australian dollar was sort of similar to this, where we've got a long tail. So let's just go to the next stage, and the next stage is to look at what the targets are. So what I do really want to emphasize here though is that if price drops down below D, all bets are off on this one. Might then develop into a bat pattern which would take it down to 88.7, but the chances are that if it drops down below D, the pattern is completely negated. So it would have to get moving from the starting gate on Sunday night for this one to actually work out in practice. So there we are. That's the that's the warning attached to it. So let's just then go to targets, and the targets work on the basis that the targets will be the price levels, okay, of first of all C up here at 154.80, and the next target is going to be at the old high at A. Then we get sort of Fibonacci multiples going on beyond there, starting at 1.27, running all the way up to 1.62 or 162%. So let's just we'll play around with those with the fib grid just a little bit. But I think what I'll do, let me just roll this out a little bit in the time frame so that we've got just a little bit more data on here, and let's bring in the fib grid so that we can start to pick up some of the extensions.